Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about the importance of asymmetry, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
I wanted to go over some fundamental things that I think are super important in our trading. I know that I almost sound like I'm droning on sometimes and talking about the same old thing over and over, but I do it for two purposes. One is to help you understand what is most important to keep out in front of you, the philosophy, the tenets of what we do, so that all the decisions that you make are based on those fundamentals. That's what's really important. That's what allows you to stay consistent. It's when you start wandering off thinking about other things that are not proven or are conjecture or just a wild ass guess. Not even a swag, just a wild ass guess, a wag. That's not helpful. You need to be consistent with what you're doing and trade the underlying philosophy and be true to it in order to see results over the long term. One of those things, obviously, is our asymmetric risk to reward. And it is fundamental, and it's based on some of those basic tenets that we talk about, such as capital preservation first, profit second. We want to make sure that we are preserving our capital, that we have low drawdown, and that we're not putting ourselves in peril at any one time. And it's also a recognition of what the market is about. We are not here to extract profits from the market as if we have some supernatural power to be able to, at our will, just grab whatever profit that we want out of the market. If it worked that way, everybody would be making money. We can grab profits out of the market, but it's not on our time. It's on the market's time. The market decides when it's going to give us an opportunity. Now, unfortunately, that opportunity is not in a high frequency output. The opportunities are fleeting. Most of the opportunities that you have are small, but you have to take those as well. You need to be in the market all the time in order to take advantage of those times when the market is willing to give you what you need. And this is really the fundamental reason for doing an asymmetric trade. In other words, super tiny risk. The tiny risk is designed such that we need to be in the market all the time. We know that we are kind of 50-50 in terms of our ability to turn a profit or experience a loss. So we want to make sure that risk is small. And at the same time, we want to have a strategy that will allow us to take any size profit, from a small profit to a very large profit. So hopefully you understand this fundamental thing that we're doing, why asymmetry in that regard is so important. The other thing that we're trying to control our drawdowns. When you trade in this asymmetric manner, it results in a natural right-skewed long tail distribution of your returns. What that really means is that your returns on the negative side tend to be frequent but small. And on the positive side, most of them are small, but there are also long tail winners. In other words, some distribution of trades that range from small to very large. On the negative side, as I said, they only range from small to small. That's it. That's a key point that we're trying to achieve. And it only happens when you put on this extreme asymmetry.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.